Hi, Jeremy Peterson here with Vesta Real Estate in Ogden, Utah. I'm on location in Liberty Park today. I thought a change in scenery would make things interesting. And what is interesting is Utah's real estate market. The last video update I gave was in January, so let's take a look at what's happened since that time. If we look at our sales volume, we can see that all of last year we saw significant decreases in the number of homes sold. Well, the beginning of this year, in January, we saw a significant surge. And that surge was related to anticipation among buyers that interest rates were going to increase. And speaking of interest rates, that's exactly what they did. We started out in January with 3.1%, and then today we have 5.3% rates. We have to offer a moment of silence for home buyers who just are finishing building their homes. When they decided a year ago to build, interest rates were a lot lower, and now these folks are having to refinance their construction loans into permanent financing at these elevated interest rates, which means they have the home of their dreams and they're going to be eating rice and beans seated at a folding table for the next several years. And that actually might be some good closing gift ideas for you agents out there. We haven't seen rates this high since 2009, and we haven't seen an interest rate increase this much this fast since 1994. Back when I was a junior in high school. Because of the frenzy of buyers in the housing market, the time that it takes to sell a home is still hanging around record lows. Right now, half of all the homes sold in Weber County are selling in 6 days or less. The worst news is regarding affordability. If we look at our affordability chart here, we can see that rising prices and rising mortgage rates have formed an unholy union to punish buyers as much as possible. If we're to strain and find a silver lining in all of this, it might be in our price growth chart. And here you see that in last year we peaked out at 35% appreciation, and today we are appreciating at only 18% per year. In a prior video, I talked about inflation and that housing prices and car prices had appreciated, and it might be, a scenario might be that the price of everything else might catch up to housing and transportation. Sadly, that appears to be the scenario that's playing out as the cost of food and the cost of fuel and the cost of everything else just continues to rise. Also, we talked about that inflation might be a good thing if wages kept up with or outpaced inflation. And sadly, again, that is not the case. The opposite is actually happening, with incomes lagging behind our inflation rates. This is a bad setup for the housing market. At some point, buyers are going to be tapped out. Their purchase power is going to be gone, and they will strike from the market if these trends continue. Now, fortunately, if this happens, I have some tools I acquired during the Great Financial Crisis that I use to help buyers and sellers navigate a market where the mortgage market is dysfunctional. In the meantime, what can we expect moving forward? I expect the price growth to continue to decelerate, as I mentioned earlier. I believe that we will see the bidding wars tame down quite a bit as buyers need to use the extra cash that they were using to guarantee prices above appraisal. They'll probably need to use some of that cash, if not all of it, to use in down payments to keep their mortgage payments under control. Also, inventory right now is twice of what it was last year at this time. Keeping in mind last year was record lows, but still we have twice as many homes to look at, and I expect that trend to continue as sellers anticipate that we're likely in the final innings of an incredible seller's market. So the market is dynamic, it's unpredictable, and it's changing. If you need an expert to help you navigate this in selling your home, give me a call. Thanks for tuning in.